Good morning, ladies and gentlemen. The time is 10:30, and I've just exited my position. It's the 22nd of September, and basically we have had 3 days of absolute carnage in the market with respect to the kind of volatility and moves we've been seeing. That being the case, I wanted to keep my risk extremely low today, and that's what I ended up doing. I took a trade which initially started going against me, and at one point where it could be make or break, wherein I absolutely needed a rejection for that position to hold, and where if for whatever reason there was a short covering triggered, I would get seriously burnt, is when I cut it out. Also, and then I closed down about 0.2%. So it was a pretty small stop loss to give. And my idea is I would wait for this event to play out and then try to take additional risk. I think risk should be taken when you're winning, not when you've been losing. That's when you reduce your risk exposure, and that's more or less what I'm doing. I've gone over in the outro clip as to exactly the structure as to why I exited the trade. So all said and done, I hope you've had not too much of a problem with the kind of volatility that's played out in the past few days, and I will catch you tomorrow for the expiry. Take care, have a great day.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Just entered my positions for the day, and right off the bat, a little bit of IV expansion. I'm 1 point down. But basically, the plan for today is that we have opened relatively strong. There isn't that much strength in the markets. There's a big event happening later on today as well. So I'm not expecting too much of a short covering move, especially after what happened towards yesterday's close. And relative fear would be towards a dip from the current level where we were at 15,750 plus till at least 15,700 rather than a continued up move, which is why I had moved my call down to 17,700, where it is only 150 points away from the spot, versus my put, which is 200 points away from the spot. The idea is, as far as open interest is concerned as well, majority of sideways positions are building up for tomorrow's expiry with 17,500 short straddle, 17,550 short straddle, and 17,600 short straddle, and a pretty strong amount of 17,600 call rating. So I will roll up my call in case we head above 17,600 and then we hold at those higher levels at least for a good 15-20 minutes. Then I will start risking off on my calls. Today being Wednesday, and since I'm doing a credit sided trade, I think it should work out. I mean, despite whatever continued IV spike we have, because right into the open, once again, there was a slight jump in IV at one point. Both call options and put options were in the green. And yeah, whatever that is, regardless, these have to expire tomorrow. They might not lose too much value because of the evening event, but they will still end up giving up quite a bit. Now, that's one thing. What happened in the past few days? Now, I generally post on Twitter if I'm going to be trading any particular day. If I'm not trading, I also put down the reason as to why, right? So yesterday, this ended up taking a 1% hit. And yeah, day before yesterday, I did not trade because I didn't like the specific nature of volatility that was going to play out given the entire macro situation. So you can generally find that it didn't work out so well. So day before yesterday, no trade, but on Friday took a stop loss, then again took a stop loss yesterday. That's fine though. I still think September has been pretty good. It's been moderately all right because it was very, very difficult to trade a market like yesterday's market, or to trade Friday, or to trade on Monday. So it's been a difficult few days for intraday, but also in lunch should be all right. So anyway, given that tomorrow's expiry, this particular position, I like how it's structured. I think dips towards 17,500, most likely to find some support. There are chances that we break down from there, but by the time we break 17,500, where my put will be 150 points away, I will be rolling it away. And when my call is 100 points away, basically if we break 17,600 on the upside, hold there for some time. And when I mean some time, I mean a good 15-20 minutes, then I will roll away this call as well. So I'll keep you posted. All said and done, I think it's been a tricky few days. And if you aren't following me on Twitter, so generally whenever I update whether or not I'm trading, you can follow me. I post a bunch of other stuff as well. Something that I posted about is how, you know, a lot of talk today about system trading, and system trading is fine. But one thing that people should understand is that a system is only good as well as it is built. You code a system with rules which are not sustainable, then can be quite problematic. I mean, especially when you're sort of getting multiple people to use it, can be quite something to deal with. Yeah, I'm staying very brief about it, and of course, I'm not pointing fingers at anybody. I'm just expecting people to be a little more prudent in what they put out in the market for others to use. So anyway, I will keep you posted. As now it is 9:40, and more or less what I'm expecting for a while is that we will consolidate in this 17,500 to 17,600 range, in which range I will not be doing any adjustment, even if there is some kind of a fear spike on either of these options. And that's why I've kept my sizing relatively low. But my expiry sizing is about 1/3 my position. So this will let me hold on to a given position and a view for longer than if I was sizing larger. Also, just reviewing some of the positional trades. This HDFC covered call is basically now out of the money and finally starting to lose value after not having lost value for an entire month. Same with the HDFC Bank. ITC, I've sold the 250 call option because I hold about 4,000 shares of ITC. So into the up move, good IV is back on the call side. I'm expecting any continued up move would halt around 250, which is why I've sold the 250 call option. It doesn't make me bearish that I've sold the call option. The fact that I've sold it 20 points above when I ended up selling it means that I'm bullish for those 20 points. And then after that, still, if it goes, then okay, no problem. I would have benefited 20 points on my shares, and then I'll figure out what to do with this call option. Larsen, my covered call was in the money, quite deep in the money at one point, almost a good 40 points. So to balance it, I had sold this bullish triangle where I sold an in the money put option and a call option, which is one strike above that, to give me protection against a further up move. That position has benefited me a little bit. The call option has given up also a good amount of value. So the Larsen position almost coming to a point where the F&O position will give me break even, and my shares have also gained immensely. So win-win. Reliance, my position is doing really well now. Initially it had started with this particular call option, the 2300 against my shares. Since I didn't want to give delivery, I had to build around that, create some extra potential for decay, as per the view that we will hold around 2400, and that has played out quite well, and now Reliance position is also in profit. As of now, no changes to the intraday trade. Basically, as long as this holds, this particular broader range holds, and now as of now on the downside, 17,500. I need 17,500 to break to risk off on the put side, and 17,600 on the call side. Okay, we are holding now at 17,600, and it's been like 1, 2, 3 candles that we're holding here. There's a lot of strength in Reliance and IT. And meanwhile, the put option not giving up any value, in fact, has gained in value technically. My position has gained in value since open. And what I'm going to do is, so this whole FOMC event thing, the idea was, okay, there will continue to be relatively larger premiums available, but I don't intend on sitting in this position for too long. So I will wait for either like a continued 2 or 3 candles holding above 17,600 or a stiff 20-point up move to take the exit, more or less. In case that doesn't happen and we reject, because there is a good amount of There was a lot of bullish data build up towards yesterday's close. That's true, not of put option writing, but I figured most of that was to cover existing shorts in the system. And yeah, at this point, this position is just not making much sense anymore if we hold here. Okay, that's about good enough. We're holding strong, and I don't want to have to deal with this. I will take the exit because even though an OTM position should lose by the end of today, there might be a considerable amount of pain to deal with. I'm exiting mostly because now that we're holding above 17,600, if this short covering triggered, that will just be so annoying to deal with. Yeah, that's about it. I'm gonna call it a day. Mostly because it's clearly very evident that one, I just as I'm exiting, obviously, this rejection candle comes in, but it was a good enough point to, of course. So just as I'm exiting, the rejection comes, but fair enough. The idea is more or less that we continue to remain in this heightened sense of fear, and there is a situation where, regardless of the directional move, there is like a unilateral expansion on one side without any necessary compensation on the other side. So it's a steady rise of IV in the put side and the call side, so on and so forth. Makes the whole situation very difficult to deal with. And basically, until this entire volatility subsides, or there's a good enough rise in IV spike, making everything far more attractive, I think my approach would be to take a stop loss early and not really be too concerned about trying to be profitable. And tomorrow being an expiry, it should offer pretty good opportunity if we open in the morning with IVs being on the higher side. But that's an opportunity we'll take when it is given to us. I think today being a Wednesday, more or less try to see if a certain view would play out. Ideally, as we were testing 17,600 on the upside, what I would have expected is that this particular put option should have given up a lot more value, because if you look at from where it closed yesterday at 21 to what it's trading at 19, considering that we've mitigated one entire day of risk, and on top of that we are technically in the green with pretty heavily bullish bias data building up yesterday. So all of those things together, you would think that this should have lost more value as we tested 15,600, which didn't happen as this call was gaining. So it's just at that point all a mess, right? And yeah, so thank you so much for watching. And my only takeaway, I think, would be from like how the moment risk reward on Monday didn't look good, since there was a lot of uncertainty with what would happen. Plus, after a long time of moving in one direction, the fact that we would potentially head in the opposite direction now after Friday means that a lot of stuff is going to get jumbled around. A lot of people's positions, short term, mid term, long term, all of that's going to get jumbled around. That's going to lead to volatility. You have a steady one way move, and then you have like a pullback from there. It can throw a lot of things around, and those times are when, in my particular approach at least, I would avoid trading. After this amazing IV spike on Monday, I figured that Tuesday would be a pretty good day for cooling off of that IV spike. That went wrong very quickly, as you can imagine. The trade didn't last more than about 20 minutes, and it's roughly worked out about 1% of what my account size currently is. So if that's the case, in 20 minutes that's happening, clearly this continued expansion of IV, okay, get out. And I got, so basically booked 1% today, about 0.02%. And that's fine. Those are losses you can afford to take. And if anything, the takeaway should be like, take losses you can afford to take. Like, I didn't feel bad about taking this loss. I didn't feel bad about taking that loss. And one of a good estimate to know whether or not you should feel good or bad about taking particular loss is knowing that was it well within your plan to do that. So I think if anything, whenever things are looking a little iffy and it's not really going in your favor, reduce your position size, trade smaller, so that gives you more room for flexibility, gives you room for adjustment if you really need that additional capital. And also, in case things go wrong, you can cut your losses when they're small. All that being said and done, thank you so much for watching. To be very honest, the way I see it now is that really anything can happen. There are a good amount of shorts here. If they start again tested, there were people who were sitting on the 17,500 straddle now. They will feel the pressure to cover from here. Could lead to a short covering. At the same time, strong amount of put writing from yesterday towards close, and then again this morning, giving us this up move. Now people straddling 17,600. In case there's a rejection, it can be quite runoff because generally the behavior of markets doesn't go from very volatile, extremely random to very structured again, because right now everyone is waiting with their fingers on the keyboards to place their orders and get out of losing positions, yada yada. So at a time like that, I would much rather sit out, or I would wait for a point wherein clearly there is no longer a continued spike in IV, like a steady fall off, and that is when I would like to structure my trade this way. Yep. Thank you so much for watching. It's a stop loss day, but I posted about how to look at different stop losses on my Twitter as well. If you you can check out my stuff. You can take an early stop loss. It'll hurt you, but it won't really hurt you that big. A little late, your stop loss can be maybe 2-3%. Maybe on some particular day more than that slightly. It'll hurt your ego. It'll hurt your mentality a little bit. It'll hurt your confidence, but it's okay. You can survive that, provided it's not something you do too often. And then there are people who just like double down on risk as they're losing more, and invariably every novice has this tendency that if you lose, then you try to up your game and up your risk and try to make back all of that money. That always one day ends terribly. That ends terribly, and it's something that you should avoid at all costs. So, simple funda, and I think one other person on Twitter had tweeted this some time back. When you're winning, that's when you should take more risks. When you're losing, you should not take more risks. It works. It's very counterintuitive, but invariably we try to average into a losing position. It's a winning position that you should be trying to compound risk on top of and potentially eke out a little bit more reward. It's never a losing position. So thank you so much for watching. I hope you have a good day. I'm going to call it a day. I'll see what happens later, and I'll catch you for the expiry. Take care. Bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.